Your mortgage is coming up for renewal in the next 12 to 18 months, and you're one of 60% of Canadians that is about to walk into a devastating payment shock or financial minefield with massive decisions to make that could have huge implications on both your financing today and for the next 3 to 5 years of your life. So in this video, I'm going to walk you through some of the key considerations that the average Canadian is completely missing when trying to navigate their upcoming mortgage renewal and exactly what you need to do about it. If you're like most people right now, you're asking the one question: what is the best rate and how do I renew? Now that's like asking a surgeon specifically, what is the sharpest scalpel for my surgery? You just simply need more information and a better analysis on making a decision besides what's the best rate for my mortgage renewal. Let's talk about the 5 moves that you need to be making this year to make sure that your mortgage renewal is not a failure, but a strategic success in your future. All right, so this is the first move, and this one is way undervalued. This is future dating and planning against your renewal date. Most Canadians that I meet actually don't even know what their maturity date is. And this has a massive impact on what you can do and what your options are available. See, what happens frequently is people reach out to us and they've got literally less than 30 days or 60 days to actually get a mortgage renewal in place. And this is a big decision that you're making for the next 3 to 4 to 5 years of your life. Think about it this way. If you were planning for a marathon, would you just get up the next day and start running? Probably not. You would probably want to know a target date, when you're running, and how long you're running so that you could plan out your routine and get exercising. It's the same thing when it comes to your mortgage renewal. If it's coming up in 6 months, put that date on the calendar and start the conversation and preparation now. Why would you want to do this? The key to doing this is that so you can actually start to strategize. Now, there's a lot of different things that could have happened in your life in the last 3 to 5 years, but you want to look at it like a financial audit. First things first, look at where you are right now. How much money do you owe on your existing mortgage? What could your property be worth today? Do you carry any additional debts or expenses? And how early could you renew? Different banks have different guidelines around how quickly you could renew, or if you need to refinance, how much it's going to cost you to replace your existing mortgage. You see, some of them let you renew early, some don't, some charge different penalties than others, and knowing this information could have a massive impact on the decision that you make over the next 6 to 12 to 18 months. Number 2, you need to have a clear understanding of exactly where you stand financially today. Think about this. 5 years ago, were you in the exact same place then as you are today? Probably not. Whether you had kids or a loss or change your financial situation, making more money, less money, taking on more debt, paying off less debt, have more assets, you are in a different stage today than you were 5 years ago. And creating a clear audit of your financial status is going to mean a different decision as it relates to your money. Do you have more money to put down at your mortgage than you had before? Do you have a different plan to make a move and an upsize? Is your goal to invest into the real estate market? Are you carrying significant debts that you didn't have before? Or are you just in a position right now where you have a lot of uncertainty in your life? All of these 5 factors in different areas will have an impact on what decision that you make today. And it shouldn't be what is the lowest rate. So here's the deal. Number 3 is what your bank is offering you. Here's what happens. Your bank's going to send you a piece of paper, and on that piece of paper, they're probably just going to put 2 options, a 5-year fixed and a 5-year variable. And then they're going to ask you to set up a meeting. That's where they get to pressure you into picking an option that they want you to choose. But just like anything in life, you shouldn't just simply ask for the one option. You should have a clear understanding as to which option makes sense for you. And here's the other thing. Based on that x-ray that you just did on your finances, you should also want to clarify specifically whether or not this bank's goals and their products actually still make sense for you today. Do you need a home equity line of credit? Are you refinancing? Is your advisor or mortgage professional able to serve you still? These are all different things that you need to be conscious of when you're figuring out which decision. Plus, there's so many other products that are available out there on the marketplace that you have to ask yourself the question, besides the interest rate, do I need a different tool? Do I need a pickup truck instead of a car today? What are these different factors that you're looking for? So a few questions that you should be asking and things that you should be looking for. Do I need a home equity line of credit? Is it a readvanceable line of credit, and is it set up correctly right away? You could be using this for strategic investing, like cash damming and other types of investments that could be out there, or just generally investing in the marketplace itself. What are the prepayment terms and penalties if life changes or my situation changes in the next 1, 2, 3, or 4 years? What is it going to cost me if I were to refinance my mortgage in the next 1, 2, or 3 years of my mortgage term? Are you getting this information up front? Because this will help you make the decision. If you did take a variable rate, what is the lock-in process or policy for this associated mortgage product? And if you went variable, is this a fixed payment or a variable adjustable payment mortgage? There's a lot of different different things that you need to be thinking about at this time. So making sure that you have clarity on that is going to be key on this financial decision. All right. Number 4 is a massive move. And it's something that a lot of people are doing right now, because quite frankly, if you took a mortgage 4 years ago today, you could have paid an interest rate of 2% or less. And when you're coming up for renewal, your mortgage rate could be double or 2.5 times that, depending on where rates land when you actually get your mortgage. This will have an impact on your monthly payments and therefore will have an impact on your budget. And so one of the moves that we look at, and this for a lot of people, they think is a setback, but it's not, is restructuring your amortization. Now, whether you have 20 years or 25 years remaining, when you're refinancing a mortgage, you have an option to go back to 30 years. And while yes, you are going to pay more interest potentially if you take 30 years to pay it off, it could also put you in a better financial situation on your cash flow monthly. If you have high interest debt or other expenses, that could be the area of greater concern. Now, typically doing this is a refinance, so you're restructuring the loan, and there's a lot of other considerations that you want to look at if you're refinancing your mortgage, but it could be the difference between making a monthly payment and not being able to keep your home. And so it should definitely be something that most people consider when they're thinking about coming up for renewal. All right, and this is the last point, and this one is obvious but key for me. I like to think of it as a strategic breakup. Your bank is loyal to you as long as you're making them money. But other than that, there is no other benefit of you falling in love with your existing bank. If they do not offer the advice, the support, the terms, the product, and the strategy that we've talked about in your video today, it might be time to pick up your mortgage and take it somewhere else. You are not a tree. You can move to a different location and we can help you get there. This could open up your options. It could save you thousands of dollars. It could help you invest or just generally provide you with greater stability in your mortgage financial life. Sometimes the reality is people look at this as an emotional decision. We should instead focus on making a better decision based on the math and your exact situation. So if you want to know if it makes sense to restructure your existing mortgage, renew early, or switch lenders, we can help you here. And if you found this video helpful, just hit like or subscribe or send it to somebody else who's coming up for renewal.